Good morning, everyone, and welcome to the DecisionPoint trading room with Carl Swenlin right over there, my father, and myself, Erin Swenlin from DecisionPoint.com. We are here to get you ready for the week. We are going to look at the market in general, the big four, as we like to call them, Bitcoin, yields, among other things. I'm going to go through the sectors. I'm definitely interested in seeing what's going on in the consumer discretionary area after a successful Black Friday, from what I'm reading. So we'll look in consumer discretionary. I'll probably dive down into it. Maybe we'll look for a few stocks that look good in those areas. I think that's about it. Before we get started, we are not registered investment advisors, so all trading decisions are your own. Anything you hear in this trading room or read in our blog should never be considered a call to action. All right, I'm going to pass it to you, Dad. Let's go ahead and get it going.
Okay. Starting out with I'm not going to start with that. I want to do something else. Somebody last week had a question that we never got to. It is how, why is the falling wedge bullish? And so I thought I'd just briefly cover that. A falling wedge has both the top of the formation and the bottom trend lines going down. And in a falling wedge, the top one is steeper. General rule is the steepest line is the weakest. It'll eventually, it takes more effort to hold price below the line. Now this works exactly the opposite for rising wedges. Rising wedges, we expect them to resolve bearishly. And I probably said that falling wedges are bullish. More accurate is to say falling wedges, we expect them most of the time to resolve bullishly. That doesn't mean the trend is going to change and all things will be wonderful. Right now this is not the tightest wedge you've ever seen, but it still makes my point. It broke out to the upside, but it didn't maintain that direction. It basically failed. The bet rally failed and basically went to new lows eventually. Now, here we have another falling wedge, much tighter. And again, it broke to the upside and the rally continued. It didn't make a new high, but that's a pretty good rally. So that's essentially the rule. Again, the steepest line is the weakest. Just remember that, and that'll help you remember how these things are supposed to turn out. Now, they're more likely in a bull market to break to the upside and continue. In a bear market, they're more likely to fail. Even if they do break out, they're more likely to fail afterwards. But anyway, bull market makes them more favorable. Bear market, not so much. Okay. Since there is a couple of things I wanted to mention too before, a couple of points to make about the economy, how things are looking, and maybe people aren't paying attention, but one of the things around this time of the year, Amazon's normally hiring tens of thousands of people to help with the Christmas rush. This year, as you recall, they're planning to lay off about 12,000, I think it was, but right up there. So that's a great big difference between what we're used to. And one more sign that things aren't going so well. Anecdotally, here in Redlands, I get my lunches through DoorDash quite frequently. And I was checking the menu on Dickey's Barbecue. It's normally got lots of brisket, chicken, pork.
Mm-hmm.
All they have now on the menu, they have no beef brisket. They have pulled pork, and they have the manufactured chicken breasts that all the restaurants carry anymore. They're just awful, but they have those, and that's it. And then Arby's is another one we frequent, and they used to have, their stuff is basically lunch meat, sometimes heated, whatever, but they've got nothing but beef. Essentially, they used to have sliced chicken, lunch meat, sliced turkey. Can't get that anymore. All they have is the beef. Now they have the Franken chicken breasts, It's like everybody has those apparently. But again, these are shortages that most people wouldn't notice, but it's just a symptom that things are not going well. And of course, we're looking at a possible rail strike. I sure hate to see that, but it's hanging out there over our heads. Okay, let me move to the analysis.
I don't know, you've made me really hungry now.
Well, no brisket at Dickey's. Okay. The S&P 500 represented by the SPY here. Notice we've got a slight, not very tight rising wedge here, but notice also it on this last little leg here, it did not make it all the way to the top of the formation before it topped out. So that's another sign it's probably going to break down out of the formation. We're in a bear market, so it's liable to go worse than just a little way. Just don't need to set us a less steep rising trend line. This morning, I set up a longer term chart for the bias assessment chart. We have the Silver Cross Index, which is the percentage of stocks in this case in the S&P 500, which have their 20 EMA above the 50 EMA. It's at 76. If we look at the 50 EMA reading, it's at 87. So that means, remember, the exponential
moving averages
always move in the direction of, they always go towards price, wherever price is. As you see here, the price is above the 50 and the 20, and they're both moving higher. So while the percent of stocks above the 20 EMA is at 90, they have to get above the 50 before we get the crossover situation. So the best we can do right now is 87. These are all pretty overbought. Above the 200 EMA, that's a 65. So we use that to compare with the Golden Cross Index, which is the percent of stocks with a 50 EMA above the 200 EMA. Again, we have the limiting factor on that is 65, but it could improve to that much if the trend continues higher. Have I missed anything?
I don't think so. I mean, just the fact that everything's so overbought is kind of the issue, isn't it?
Yeah, this, as you see, is not overbought. If we get the entire chart up here, we could see that stocks above their 200 EMA, it started to fail months ahead of the price top. And again, you had to wait a long time talking about how participation was bleeding off in the long term, and but it finally paid off for your bearish outlook. Okay, our short-term indicators. These are the Swenlin trading oscillator for breadth and volume, and the percent of stocks greater than the 20 EMA and percent of stocks with PMOs rising. Again, both of those are in an overbought situation. The STOs are becoming overbought. They're certainly overbought enough to coax the top out of the price chart here. In intermediate term charts, we have the intermediate term breadth momentum and volume momentum indicators. They are overbought, not as much as they were back here in the summer, but they're definitely in an overbought range. And again, looks like it's a good chance we're going to get a top here. Again, looking at them together, we see all four of these charts are overbought, and that's not a good sign. Looking at the dollar index, UUP ETF, notice we've got a persistent support right here at this level, and it's continuing to hold. So it's possible we're going to get another bit of a rally out of the dollar here. It looks like the PMO is beginning to trying to bottom, With the dollar stalled, gold is stalled as well. Although we are in a rising trend, or we were. Right now, we've got a top above the top, and we've got another top here below a top. So it's like it's rolling over and possibly heading down to this level here, with running into this trend line, falling trend line. PMO is topping out. It's and this is 1 year. No, this is a 6 year. Let's go to the 1 year chart. Okay, it's not particularly overbought. This is a dollar gold is the symbol, and it doesn't update till end of day. So this is as of Friday. We still have a rising trend here. Crude oil represented by the USO ETF, and it's found support at this level twice, and so we might be looking for a rally here. Again, we follow that chart, but it seems as if oil, with the shortages, winter coming, and oil should be going higher, but it is not. That's why we follow charts. Here's a good, nice, tight rising wedge on the 20-year bond ETF. And that's, we can expect that's going to break down out of that. Don't know if it's going to retest these lows, but anyway, this is not likely to continue. Continue with interest rates. You'll notice we've got kind of a cycle going here with the is pullback here, more severe one here, and now I would say equal severity, but a lot quicker than this pullback. But note that this is a 1 year, 4.76, and that's marvelous for the owners of the 1 year bond.
Yes.
We're going to looking at the dynamic yield curve. This again showing how the shorter term, shorter duration interest rates are higher than the longer term, and that's a bearish signal for the market. Here we have the 10-year yield chart, and it's topped out. We've got an Adam Eve double top. Here's the confirmation line. It's broken down through that. So something like this area here would be a minimum downside target. And if it gets too severe, we would expect it to be stopped by this rising trend line. Bitcoin basically holding a range here since the first week of the month. And I think we have to look at the long-term chart Bitcoin to really get a sense of what's going to happen with this, or what I think is going to happen. And you've got this giant top here, and that kind of a breakdown generally results in price returning to the basing pattern where it started out. So somewhere around this area. And it could go back up again, but I just don't see it. That's not normally what you get out of this kind of a formation. Okay, we're checking on the large cap tech stocks here. Apple having not a great day. Amazon. This is, by the way, this pullback we have today is being blamed on the Chinese having their protests over there. That may or may not be true. I don't find that too compelling.
There's always got to be a reason, though, right?
Yeah, they pick a reason, but some of them, they're just they're off the wall. They don't make any sense. So let's see. We've got here's Google. Again, it's in a bear market. It's bouncing off the low bear market low here. Meta, it's been down 77% from its all-time high. Having sort of a rally here. Microsoft bouncing off its low. It's been down 40% from its high. And the reason can be found right up here under PE. These stocks generally carry a high PE, but in a bear market, things move back towards normalcy, and 26 is still not in the normal range. Netflix, credit where credit is due, they've rallied 95% off of their low, but they're going to have to rally a lot more before they get back to their all-time high. NVIDIA, also having a nice rally off of the October low. And finally, Tesla. This is a longer term chart, and we've got, again, this we showed you this last week, the giant topping pattern, and it's probably going to go below that. Let me just pull out a little bit of let's see, look at 5 years and see what we got. Okay, yeah, long way. Here's the base pattern, which is the magnet. Maybe it won't go that low, but probably going to go a lot lower than what it is. We're watching real estate sector today. It's very close to having a silver cross, which is the 20 EMA crossing up through the 50 EMA. So maybe today we'll have a buy signal on real estate. And I think that pretty much does it for me, Erin.
All right.
Questions?
I did notice that there were a few questions for you. You kind of addressed the other one, I think we did, but it says, how concerned are you about the COVID issues in China creating a problem for our markets? I think you kind of said, but.
Well, yeah, that's an issue. I think it's a big problem. We're thinking about, what I'm thinking about is I'm on medications for various and sundry, and most of our medications come from China, and that's not good because you don't want to be running out. I don't know what contingencies these pharmaceutical companies have to keep the bed it's flowing. So that's a major problem. And you can just spread that out among everything else, electric cars and, I don't know, all the stuff that they make over there. So I said, I showed you on the two fast food places today how they're running out of product. I don't think they make turkey lunch meat in China for us anyway. But that it's just that's a big problem. You said there was another one?
Yes. Can Carl elaborate what he means by EMA moves towards price?
It's the simple moving average will generally move towards price, wherever price is. But because it's dropping stuff off of like a 200-day moving average, it's still keeping track of the move it made 200 days ago, and that drops off. So that can affect, if you have a small move today and a 200-day move dropping off, which is large, it can affect, today's. Whereas the exponential moving average, it takes a slice, let's say for a 200 EMA, it slices 1/200th of the current moving average and throws that away and adds 1/200th of today's change to that moving average. So it's always affected most by the current activity, and it just mathematically, if price is above a moving average, the exponential moving average will move towards price. That's the way it works. So you always know what it's going to do in that regard. It's just, again, more reliable if you're relying on the crossovers or movement to generate an action signal for your trading. Good to know.
I'd say the math professor over here says you passed your test. No, and just one other comment is with the EMAs, and part of the reason we like to use them is, as Carl explained, it's going to put more emphasis on near-term data rather than give every data point the same power with perhaps a simple moving average of a 200-day. So that's why we kind of prefer those EMAs, because it puts a little more emphasis on the near-term data, which is honestly, where do we pay attention to charts? The far right-hand side. So to us, it makes more sense to use them.
These EMAs became into use thanks to the Jet Propulsion Laboratory in Pasadena back in the 60s and 70s, I believe, which they were using it for the space program. And I started using them because you only need 2 lines of data, today's and yesterday's, to calculate your exponential moving average. So that it's just, they're just better. I'm sorry. I've got another question here asking about OBV on Tesla. Good question. You can see the Tesla chart here. Notice this is a longer term chart, but notice how the OBV is trending higher while price is trending lower. That's a negative divergence. Okay. No, I'm sorry. That's a reverse divergence.
Reverse, yeah.
Because, it generally OBV should lead price. In this case, it's going in the opposite direction it ought to be with what price is doing. So this is even worse. It's basically, so all this volume can't keep the price up where people want it to be.
Right. So, I mean, ultimately, price should follow volume. And if the OBV is way up there, you would expect price to be making its new highs as well, and it's not.
Well, here's another one for me. How can TLT go down and TNX go down also at the same time? Let's see. Is that really happening?
Well, I think the way we were looking at our analysis was that, well, TLT is doing well, but it looks like it's going to move lower. And then when we were talking about TNX, it's like, okay, well, it's holding support, but it looks like it's going to go lower. So I think that might be where the disconnect was for the viewer.
Right. Just looking at, here's TNX, and it is going down at the same time that TLT is going up. I'm not having good luck with here. There we go. So no, they TLT is 20-year and TNX is a 10-year. So they should go in opposite directions. TNX is a yield and TLT is a bond price. I think that.
Yeah, I mean, the main thing is that you're talking about time frames too. You know, right now, TNX looks vulnerable. TLT also looks vulnerable, but that is possible. You know, we don't know which way either is going to go, but we have to look at the overall environment. And, you know, TLT follows the 20-year, not the 10-year. And honestly, when you look at that yield chart and all the braiding and inversions, it's not completely out of the question that you could see TLT maybe pull back a little bit as along with the 10-year yield. That would be my answer too.
Okay.
All right, let's go ahead. I'm going to share the screen. That was a really great discussion, though, I think, on the wedges, on yields, on EMAs. Hopefully everybody's gotten a pretty nice little instruction today on how some of this stuff works. Okay, so let's take a look at what's going on. So we know the market is lower, and so you can see all of the sectors are pretty much trading lower currently. Let's get this up to date, though, because I know it's not completely there. Get my stuff out of the way. Zoom's so good. It gives you all of your stuff right where you need it, only it sits right over the charts. Okay. So right now, consumer discretionary is up slightly. So is consumer staples, just slightly, but everything else is moving lower. We looked at this on Friday in the subscriber-only Diamond Mine trading room. And really what we noticed there is, you know, most of these PMOs are starting to kind of hook over a little bit here. One of the biggest problems on these PMOs that are trying to hook over is that they are overbought. Most of them are reaching near-term overbought conditions. You can see with healthcare, nice bottom above the signal line on the PMO, but the PMO is very overbought right now. And we do see it pulling back slightly to this area of support. As far as which looks the most bullish at this point, I would have to say discretionary is looking pretty good. Healthcare, as I noted, is also looking pretty good. We talked about real estate looking like it might double top out here. I know I was really interested in real estate the last 2 weeks, mainly because we were seeing mortgage rates moving lower. And as you can see, that doesn't always translate into real estate moving higher, but we did get a little bit of a rally there. And that silver cross, that one didn't come in. Yeah, it's not come in yet, but we're getting really close to a 20-50-day PMO crossover. Let's go ahead. I want to.
It was up there this morning before we started. It was, you know, earlier on, but the price has fallen, so it's not going to happen. It doesn't look like.
Yeah, not today. But as you can see, price is following, or I mean, these EMAs are following price. They're moving up because we've got price above both of those. But the fact that it did lower, that's what could still keep that margin between the EMAs wide enough to prevent the crossover, at least today. You can see under the surface, participation looking fairly good. Silver cross not quite overbought here on XLRE. I mean, I think it looks okay, but the first thing that really caught my eye when I saw this chart was the double top that could be forming here. So there are a lot of things on these charts that are starting to look a little bit suspect, if you will. So let's look at XLY, because this one was, I thought, looking pretty good moving into this week. Mostly seeing price, though, consolidating in a trading range. When I go to look for a stock, that's really not what I'm looking for, is a trading range. I mean, you're going to see trading ranges, and certainly trading ranges isn't a horrible thing if you see a stock that's pretty much in that tight range, but you really need to see price near the bottom of that range. So right now it's right in the middle. I think we're pretty vulnerable on both sides of things here for discretionary, but overall we are starting to see a little bit of outperformance here. Stochastics, while not above 80, are at least oscillating in positive territory here. And participation looks pretty broad. The problem we have here is that silver cross getting really, really overbought. And we talked about this earlier about bias. And you can see we do still have more stocks above their 20 and 50, but barely. So as long as this stays higher, as we were saying, the silver cross should at least hold up. But it certainly is going to find it difficult to continue rising when you have some deterioration going on here, at least as far as the percentages not being that much higher than what's going on with the silver cross.
You know, could I comment here?
Always.
Notice that we have a double bottom, October, November double bottom. And notice that it rallied off that second bottom, but failed to even get to the confirmation line level, and has pulled back. And now it can still keep going higher, but it's not looking
not
good.
as bullish as it was.
And also look at the thumbnail. You can see price is between the 50 and the 20 EMA, and notice the 20 is rising and the 50 is falling, moving towards price.
Moving toward price once again. All right. Staples was also trading a bit higher when we just went to look. I've liked Staples. I think they look really good. You've got sort of this, I mean, I guess you could call it kind of a reverse head, left shoulder, right shoulder. We got the breakout here that confirmed the pattern. You know, XLP is now above its longer term declining tops trend line. So that's a good intermediate term indicator that we might see higher prices here. But there are a few problems that we have to pay attention to. Number one, PMO is very overbought. Silver cross, very overbought. Notice also in this thumbnail, it's flattening. 87.8% have silver crosses. 100% have price above their 20, and 94% have price above their 50. We still could see that silver cross moving higher, but it is starting to get to that upper part of its range. You can see that typically you're not going to reach the 100% level, and we're already at that 87, 88% level. So I think that consumer staples still look good, but again, a lot of these sectors or stocks that we look at that are looking good, I'm using air quotes, a lot of them are very overbought. And so all of them are vulnerable to some downside movement. I think staples still looks pretty good. If the market's going to be soft, this is one of the areas people do like to flock to. Don't need to spend much time on energy. We talked about oil, but look at this rounded top on XLE. That definitely is suggesting lower prices. Notice also the drop in participation of stocks above their 20-day EMA and relative strength failing here, stochastic starting to fail. You may have a lot of stocks above their 50 and their 200-day EMAs. Well, that makes sense. Look at what's going on with XLE. Price is still well above the 50 and the 200-day EMAs. but it is also breaking down. Financials, I really liked the look of going into this week, holding some support here in the very short term. But overall, it is hitting this overhead resistance level. PMO is turning down. I'll add that thumbnail just so you can see it a little better. And yes, so we're starting to see that PMO failing a little bit here. We could end up with a bit of a double top on financials here. So definitely start, all of these have that look of overbought and showing a tiny bit of weakness. And that is really what you're looking for as a top in the market or a top in that stock. Healthcare, I think, still looks pretty good here. You've got really nice participation. Notice Silver Cross at 73%, but 89 and 86% are above their 20 and 50. We could see higher movement on the Silver Cross, but again, really getting overbought here. An overhead resistance looming large at the high from back in April. XLI, just a quick peek here, also breaking out, pulling back toward that breakout point. We've got pretty decent participation, but noticing that that Silver Cross index is starting to top out a little bit. Materials looking pretty good here, but starting to top out again. Now we're looking at these double tops in the short term that are starting to show themselves on most of these sector charts. So we do have to be very careful of those double tops. Another double top here. We talked about real estate. Technology, everybody's always interested in. Also double top coming in here. And this is happening below the 200-day EMA. XLT is clearly still in a bear market. We do have this kind of rounded bottom here with a possible handle on kind of a cup, but I think that's wishful thinking at this point. PMO starting to fail. Stochastic still looking good. We still have a lot of participation. Silver Cross not completely overbought like we saw on some of the others, but notice relative strength is starting to pair off. That would be bad news since technology is generally the driver of the markets, and we're starting to see some failure in there. Utilities have been on a nice run. We have a Silver Cross in the making here with the 20 coming above the 50. Everything else looking pretty good here too for utilities. Notice the Silver Cross is not at all overbought here. And you've got some great participation, 90%, 86%, and only 57, 56% have Silver Crosses. That's going to continue to expand. Golden Cross starting to expand. Notice relative strength. I think if we had to look at all these sector charts and pick one, utility certainly looking most bullish in my opinion.
Yeah, we're getting what is it? A golden Silver Cross on that one.
Yep.
Today. And
yep.
Let me make a comment here. The Silver Cross Index, Golden Cross Index, and the percent of stocks greater than their 20, 50, and 200 EMA, those scales are finite scales. They go from 0 to 100. And when they can get overbought and they can stay there a while, they generally don't. You should see, this one, it has a lot of places where they flatten and stay. But you look at the other charts, it's not a regular thing that you see. But so you can have them. The PMO, for example, is not finite. It's not infinite, really, but it's not finite, nor is your price chart. So don't be misled when the price gets up to the top of the range on those with charts with finite ranges.
Yes. So, I have to say, I like the way this participation is going, and similarly, oversold conditions can persist. You can see that's what we had during that big decline back in September and the early part of October. Let's go very quickly. I know, let's see, we're at 9:42. So I'm just going to look really quickly at some of the industry groups.
I have a question here you must answer.
Okay.
Are you running any year-end specials on your subscriptions?
Yes, right now we are. So Cyber Monday, I'm going to be sending out a notice to all of those on our free email list. It's an excellent Cyber Monday special. It is buy one, get one free. It's really kind of a quiet one because honestly, I didn't get all of my marketing materials together, but buy one, get one free. It's not advertised on the website. You have to go in and just take that month, and then I will add that extra month onto your subscription. I will let you know that you want to get in, even if you don't do the Cyber Monday special, you're going to want to get in before the end of the year because our prices will be going up by quite a bit starting in January. So if you want to get grandfathered and have the best rate for as long as you keep your subscription, then you want to go in and before the end of the year, get your DecisionPoint.com subscription. And if you do that today, I'll give you a free month on the end of it. So pile in, guys. Thank you so much for bringing that up. You can tell how great I am at marketing here. I am a technician. I am not a marketing major. Okay, so let's go ahead and look into, we did like the utility sector, so I'm going to go into that one in particular. There's only 4 groups. Gas distribution pulling back just a little bit. PMO getting on the overbought side, but still looking pretty good. Multi-utilities still on a nice run. Silver Cross coming in today for multi-utilities. Look at the stochastic staying above 80. Conventional electricity, again, also on a rising trend. We don't quite have that Silver Cross, but if price can continue to go upward or at least stay above that 20 and 50, that should come in soon. And water also looking very good, but PMO getting a bit on the overbought side. But I would say looking at all 4 of these industry groups, I think all of them look pretty good going into this week. All right, let's get it going with those symbol requests. I see them, all of them in there. There's a lot going on. Any other questions?
There was a question, rather than look at the chart, but is AMD and NVDA are sliding. Should I take a profit or stay on the sideline? I don't think we answer those kind of questions, do we?
I always give an opinion.
Okay.
But they are opinions, so we have to go with that. Looking at the overall market, I don't think it's a bad idea to start closing some of those positions. I know that I've been closing positions. I'm now at 35% exposed, and I had a lot of positions that were on, laying on profits. I felt like it was the time to start selling those with the market starting to look a little overbought and weak. I want to book those profits, take no chances moving forward. Technology, notice all these little double tops. To me, that is the high sign. Yes, we have Silver Cross Index, Silver Cross is occurring, but these little double tops are a real problem for me. You can see PMO also overbought and trying to turn over. I don't think that you would kick yourself right now later for getting out. You can always get right back in. So AMD, and which was the other one?
Sorry, I got rid of the question.
I thought it was AMDA or something like that.
NVIDIA? Was it NVIDIA?
Oh, NVIDIA. Right. And again, little double top. And in this case, hitting the 200-day EMA, turning back down. The second try at the 200-day EMA didn't also failed, but it didn't even get up to test it as far as we had that price top the last time. PMO very, very overbought. I mean, relative strength is still trending up against the group, against the SPY. But again, I just have this sense of, I don't want to say doom and gloom, but I just don't like the way these price patterns are looking right now. So I'll just be honest about that and tell you that I have been closing my positions. So do with that what you will.
Right. The market is last year it rallied right into the last day of the year. I don't think that's going to happen this year. I think we're going to see a top pretty soon here. Okay.
Yep.
Did you want to? Okay, you're.
Next.
It's you got the declining tops line there. Anyway, shall I give you a
Yes, let's go. Let's move through these.
MPC. MPC.
Okay. All right, we're back in energy here. I would just, first of all, it's in energy. Remember, we looked at that sector. Yes, it's been doing great, but it is topping out. And it's something to pay attention to. Yes, again, you're in a stock here that is outperforming its group, but look what the group is doing. The group is slowly fading on its relative strength. And that means that MPC will probably start losing relative strength as well. I don't like anything in this sector, to be honest, except with the exception being coal. I think coal still looks really good in the energy sector, but everything else, look at the PMOs flattened out, trying to turn down here. I mean, again, you've really lucked out here. You've gotten some great profit despite USO and crude oil moving lower. It certainly could go higher, but I imagine you have a pretty good profit here that you could book.
GILD.
Gilead. All right, another one. Notice the PMO very overbought, topping out. RSI is very overbought. It hasn't topped out yet, but I would say on this one, it's a biotech. So they travel really strangely compared to the market. And at this point, it's doing pretty well. The group is performing about as well as the market, while the market's looking weak. So this group might start to struggle as well. I think I would probably, at this case, I don't see a lot of weakness except for today. So I know I would probably just be tightening at my stop. I would probably hold this. And I will tell you, no matter what we look at today, I'm more than likely going to tell you, don't expand your positions. So just out of the gate, that's kind of where we're going to be going.
MNST.
MNST, Monster Beverage. This has a very similar look to the last chart we looked at. Difference being that the group itself is starting to outperform. So that's a good sign. Looking like a flag that's coming together here. RSI a little on the overbought side. Stochastics above 80. This one still looks like it has some internal strength and could end up with a breakout out of a possible flag here. Let me get my inspect tool. So this is your support level here, and that looks like a pretty strong support level. That would give you a stop right around 3-4%, 3.5%, 4%. I think that I would probably stick this one out, mainly because I think I could handle a 3 or 4% decline if it didn't do what it's supposed to do, if I had this particular stock. But just know you're in for a possible 3 to 4% decline, and then selling it and losing, whatever gain you probably had there. So again, consider, tightening up these stops on some of your positions if you're not in the mood to sell them just yet.
CPB.
Campbell Soup. Good. Hitting overhead resistance. It still looks pretty strong. I mean, the PMO's on a buy signal. Stochastics are above 80. They do look a little toppy. Notice that the rising trend on relative strength. This is one of the sectors that does still look pretty good, but this is right up against that overhead resistance level. Again, I still see tightening stops as a good idea. You could go off of this particular top. That's only about a 2.75% stop level. That would be palatable because it does look like it's going to break out and continue higher. I'm not going to lie, but again, after a rally of this degree, I don't see myself jumping into something like this, but certainly holds make sense, especially when you can tighten at the stop like that.
JPM.
JP
Hold, sell, or
Morgan.
buy.
What is it? Buy, hold, or sell?
Right.
Okay. All right. Well, I think I already said buying is not going to be in my vocabulary today. This one I would definitely not want to buy. Look at this PMO turning over in very overbought territory. We do have a sell signal coming. It's currently on the buy signal. Stochastics are still above 80. So this could just be a little bit of a hiccup as far as stochastics are concerned. But knowing what's going on in the market, notice that the industry group is losing strength against the S&P. Also not a good sign. Could be setting up a little double top here. Let's see. So again, you could consider booking a profit, but if you wanted to hang out in it, your stop level would need to be at least another 3.4%. Again, if you want to, sit on that and know that that's probably, you're already down 1.4 today. And the PMO is basically saying sell. So if you were listening to the PMO, that would tell me that at a minimum, I need to tighten my stop, if not book some profit here.
Is ADM a hold?
All right. Similar look here, kind of double top-ish if we do get the decline. PMO is no help whatsoever here. Stochastics topping, but still above 80. It's not the best performer in its group, but its group is doing fairly well. Where would your stop have to be here? Probably, well, that's your best stop level, and that's at 6.3. But you could tighten it probably up to these lows over here to about 3.5%. I just would be really careful here. I mean, I don't like the way it's trying to top a second time. It's in a good group. It's performing pretty much in line with that group. Certainly a tight stop couldn't hurt here. And depending on when you got in, booking a profit, even if you got in down here and to where we are here, it's, still a 4.6, 4.7% profit. And you're going to have to risk almost all of that to have a stop where you need to have it. So consider that.
mRNA, short-term hold or quit.
All right. Does look flaggish. Looks like we might be getting the breakout from the flag. But again, look at these indicators. I mean, they're telling you that things aren't looking so good under the surface. I mean, that PMO top and overbought territory. RSI is still positive. Stochastics, though, usually tend to be a really good early warning system, if you will. And they have dropped below 80. This is looking really, really weak. Again, it's a good industry group, but then we've got a stock not doing that well against its group. And I would say right now, if you're going to hold on to a stock, you do want to have one that is outperforming its group, or at least in line with the group. I see this as a hold with a tight stop. I'd probably set it right around here. Ooh, that's not that tight. That's 5%. Could set it right here under that recent low. That's about a 3.1% stop. I could see that. But I could also see that being hit pretty quick. I don't know. I mean, I'm just going to say that at this point, the PMO and stochastics are telling you that you should just book that profit. The price pattern and the RSI are telling you that you could hold it. But think about that 3, 4, 5% stop level. And do you really want to do that to risk, might get up here another 6.5%, but that's not the risk reward I like to have.
SLV.
Silver. All right. I must admit, was kind of a fan. I was a fan of silver going into this rally. It looks like it's already trying to peter out a little bit here. PMO not looking good. Stochastics certainly telling us that we're going to end up with a little double top going on here, and possibly a breakdown below that 20. I don't know, Dad. You're usually a follower of metal. This is looking a little bit weak to me.
Well, it's looking a lot like gold. It's just more volatile. But
right.
Yeah, we've got a rounded bottom, possibly a what do you call it? A saucer bottom with maybe a handle going here. It's awfully the handle is awfully close to the rest of the formation, so I'm not so sure. But it's metals are not doing as well as they ought to be. But as I said, that has a lot to do with, I believe, the people throwing their money into the deep dark pit of cryptos. So when they finally give up on cryptos, I think we'll see some more. We'll see some good action in the precious metals.
All right. Getting down to the end. I will do 1, 2 more maybe.
Starbucks, SBUX.
All right. Again, all of these kind of give me this toppy look. Performance is okay. Stochastics still are good. PMO is still rising, although looking a little bit flat, not surprising. Again, this one I could see as a hold as well. You're still holding kind of a rising trend here. It is, all of these are looking kind of toppy though. So, and the market is looking weak. Don't like what's going on with it. I was thinking we'd do well between now and the end of December, but I'm in the camp with you, Dad. I don't think we're going to be able to keep this rally going quite that long. Tight stop on this, probably about 4.25% would be your stop level. And it's not too thin, but I'd need at least to have a hard stop going on here. And I might be trying to ride this one out just a little bit longer.
One of the things that you need to make a decision on a particular position is what is the market, what is the condition and the trend of the market in general. And that's what we do with the DecisionPoint alert publication. We give you that base for you to start with. The market is here, so this is what I should do over here. And again, as I said, I think we're not going to make it to new highs all the way into the end of the year. I think we're getting ready to top.
I think you're right.
And we've got less than a minute.
All right. Well, here is our website. If nothing else, if you're not ready to pop in and get your buy one, get one free, at a minimum, go ahead and sign up for our free email newsletter, because that is where you're going to find those specials that I will mail out. My dogs are getting a little restless here, so I think they're telling me that the show is over. So with that, we're going to close it out and wish you good luck and good trading. The market is looking toppy. Be careful out there. Booking profits, not a bad idea. I know that's what I'm doing. And if nothing else, tighten up your stops or make them hard instead of mental. All right. Good luck at trading. And for Carl and I, we're signing off. Do go to DecisionPoint.com and get that buy one, get one free special. It is not being advertised. Bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.